Hey traders, Thomas here with orderflowedge.com. And what we do in the way that we trade, we turn the trading process from something that seems complicated into something that is quite logical. We use logical concepts and tools to break down and process the order flow information that the market is giving to us. And when we do that, we automatically make the process simple and uncomplicated. Take a look here. I want to show you an example from the crude oil market today. And remember the three main steps that we use when we're looking for opportunity as far as these inside out types of trades, right? The trades that go with the trend, we're looking for continuation. Three main steps, right? Real simple. Let's review real quick. Number one, we look to establish our bias, right? That's going to be our trade direction. Step two, which is a little bit less important but still very important, is going to be able to identify ideal trade location, right? So if we have a long bias, like we did in crude today, where's the best spot where we can get long, where we can effectively take the least amount of risk before we know that we're wrong and therefore set ourselves up for maximum profit potential, right? Step three, which is a little bit less important on the scale of importance, but still important, are the order flow clues, right? And we had several clues here. So let's take a look at this here. Let's break this down in crude. And we've pretty much had a buy bias, buyers in control since about 9 o'clock this morning. Somewhere from around price basis of 100.50 to about 101.40 highs today. It's been buyers in control, right? So what you try to do is you try to align yourself in the direction of that order flow trend, which is to the upside. Buyers are in control clearly on all three of the higher time frames, right? So we want to set ourselves up to try and fade these little stop runs that come in against the main trend, which is up, right? For a stop run, set ourselves up to enter for a stop run that's going to come in, that's going to drive the market back in the direction of the order flow trend and continue, if you're able to hold runners, to continue and go on to make higher highs, right? That's the goal ultimately. Now, here's the situation here. We had buyers in control all across the board here on this pullback. And this is just one opportunity of many today. But I just wanted to give, we had a lot of requests, a lot of emails in the last couple of days. We got a couple of open sessions this week. A lot of people asking to see stuff in crude and other markets. Well, crude is one of the other markets that we follow. So here's a typical type of setup in crude. We get this pullback here. And, we have the buy bias, in crude, it's the 4R TT here, 4-range TT, which is setting up ideal trade location. Now remember, the market's going to react at the TT right out of the gate 73% of the time, right, on average. Now, we're trying to up that percentage, right, and look for reaction there. The way that we're going to do that is, number one, trade in the direction of the order flow bias on the higher time frames, right? So that's going to give us a higher probability of a reaction at the TT. And we're also going to have clues for confirmation, right? So we get a push down into the TT here, reaction, push here, reaction again. And now look at this push. The main difference here is the change in the order flow acceptance bars, which turn blue here, signaling to us that buyers are now in control on this downtick, right? Here sellers are in control, here buyers are in control, right? We get a nice uptick, so it sets yourself up for entry here for conservative traders. Now, aggressive traders could already be looking for longs here and here on these downticks, right? Conservative traders, you want to wait for clues. This is your first solid clue. Now we get another clue here on this downtick. There's actually a couple clues in here, but one of the cleanest clues here is the lower delta force score here of 0.2 compared to 0.4, showing us that the selling just isn't coming in here anymore as deep as it was on these previous pushes, right? These are all clues that are signaling two main things when you're looking for longs. Number one, selling is diminishing on these downticks, and number two, buying is starting to come in. Buyers are starting to take control. Right? The other main clue is look at how good of a job the market is doing on the uptick here, 0.6. The buying on this upswing had more intensity to it than any selling that came in on any of these previous downswings. These are all very important clues, all pointing to the same thing, that the probabilities of a move higher of this trend continuing are very high. Right? Very simple and uncomplicated. And here we see the aftermath as the market kicks back in with that next push, that next swing, that next stop run to the upside, right? So, the TT dashboard, guys, it's simply a framework that we've built around this vital order flow data, right, in order to better organize this information in an automated fashion across several different time frames. And yeah, behind the scenes, the TT, it's very complex and robust. It's crunching and processing a lot of data. But guess what? For us everyday traders, it's simple to follow and simplifies order flow in every way. Trade patient, trade well, everybody.